I'm Garth McKenzie from traderscorner.co.za, and this is your weekly look at the S&P 500 and the Nasdaq indices. As always, we start with a look at the S&P 500 daily chart. And here you can see what I've gone on about in the last couple of weeks. There's an inverted head and shoulders pattern that validated on the move above 34.25. And the market went up to 35.50, but it's come back quite hard over the last couple of days. And in yesterday's session, it tested the neckline of that inverse head and shoulders pattern at 34.25 once again. Early indications from the futures market at this point are that the market will open up above that support line. So we've got to keep a very close eye on that 34.25 area, because that is really support now, and that support will need to hold in order to keep any bullish hopes alive for this market looking out into the end of the week. And obviously with the election just 2 weeks away now, there's a chance that some choppy action begins to emerge in the next 2 weeks until the election. Let's then take a look and zoom in on the hourly chart of the S&P 500. Here you can see the significance of that 34.25 support level more clearly. And what you can also see is that over the last few days, there's what appears to be a possible little bull flag pattern that's forming over there. So the critical levels that we need to watch on the downside are 34.25. That's where support comes in. And then at the upper levels, let's keep an eye on 3,500. If 3,500 were to break to the upside, then that would validate that bull flag type of structure that I've drawn in there. And that would likely then see the market move back up to the prior highs. So keep an eye on those levels. A move below 34.25 would be somewhat bearish, and it would open a move down towards that lower gap that I've indicated there at 3,300. So watch those levels, 34.25 at the lower end and 3,500 at the upper end. Let's then take a look at the Nasdaq 100. First up is the daily chart. And here you can see again the inverted head and shoulders pattern that I've spoken about in previous weeks. That pattern was validated last week when the market broke up above 11,600. Now again, the market's pulled back over the last few days. It's found support at 11,600, which is where that neckline of the inverse head and shoulders pattern was. At the time of recording this, the futures are pointing up, so we should open above 11,600. But it's critical that that support level holds in the next couple of days in order to keep the bullish hopes alive for the Nasdaq. Let's then zoom in on the hourly chart of the Nasdaq 100. Here you can see again that 11,600 support level that I alluded to is more clear to see over here. Notice how it joined all the peaks through late September and early October, and then the market broke up above that 11,600, which was a bullish break. Now, over the last few days, the market has pulled back. It's finding support around that 11,600 region. And again, much like on the chart of the S&P 500, you can see that there's a bull flag pattern potentially forming up over here. We'd need to see a move above 11,900 in order to validate that bull flag structure. And that would then open potential for the market to move back to 12,200 and possibly beyond. But it's critical for a break above 11,900 to occur in order for that to be valid. If, on the other hand, the market broke down below 11,600 support, then it could quite easily move down towards 11,200, where there is a gap in the chart from late September. So here on the Nasdaq 100, the key levels to monitor in the very near term are 11,600 at the lower level and 11,900 at the upper levels. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the Nasdaq indices.